I want to start by apologising for the absence of Deputy Matthew McGrath, who genuinely wanted to be here this evening and is unable to be with us. He's put a lot of work into this as well, with others, as I will explain, and he gives his complete apologies from the word go. This rural independent group has the overarching objective of protecting the family farm and the linked family home from the ruthless and speculative practices of vulture funds. We believe that this bill is innocent and clear-cut. The Impaired Farm Credit Bill 2022, if passed, would give solid protections to the family farm and family homes from ruthless vulture funds, while also providing low-interest loans for farmers. This private member's bill is sponsored by the 6 rural independent TDs and carefully crafted by the former Master of the High Court, Mr Ed Honohan. At the outset, we wish to acknowledge the tremendous work carried out by Mr Honohan and Brian O'Reilly, and thank both of them for their sterling service. I'd also like to thank Brian O'Donnell and Maria in our office, and also all those in the gallery here today who have played some part in this bill. In rural Ireland, farms are being repossessed, and lands that have been in families for generations are being sold off by vulture funds. Some banks are selling off agricultural debts to multinational property asset companies, which subsequently demand immediate payment of monies owed. Fears are growing that an entire generation of farmers could be wiped out, stalling hopes of a sustainable rural recovery. Vast tracts of land are now in the hands of vulture funds, and farmers are under immense pressure. When farmers lose their land, they not only lose an asset but also their income. The stress and anxiety experienced by these farmers have led to countless suicides. My colleagues and I have often highlighted the number of suicides that are directly linked to the financial pressures from banks and the financial institution chasing their own debts. In the absence of the government coming forward with any strict legislation to regulate vulture funds, the activities of which will wipe out a generation of farmers, we have crafted this bill to address the problems. The current situation cannot continue. We are seeing young people lose interest in farming when they see the stress and anxiety their parents are suffering. If this continues, it will spell the destruction of rural communities and be a further drain on the mental health service. All banks are acting in a manner that is not acceptable, impiling stress and misery on embattled farmers. They are destroying viable farms and undermining the recovery in rural areas. Another serious issue that is emerging is the refusal of banks to release sites to the sons or daughters of farmers who are paying off a loan. Far too long, the government has facilitated vulture funds and banks to seize and sell family farms in Ireland. This bill would create a policy platform to tip the scales back in favour of the landowner and farmers, and is all about protecting the small man or woman against the predatory financial institutions. The agri-food sector and the role of the farmer in the Irish economy is of systematic importance and is generating gross value added equating to 14.4 billion a year. Furthermore, the sector employs 1 in every 10 workers in the state. Farmers are under attack from all quarters. Firstly, the government is targeting deep cuts to farmers' ability to earn a living through climate action reductions and an inadequate new CAP programme. Secondly, banks and vulture funds continue to seize and sell off family farms all over the country, with government policy stacked in favour of these institutions. We have observed first-hand the destruction and crippling impacts that these forfeitures have caused to families and rural communities. That is why we have brought forward an imaginative new bill. It is well known that the international vulture funds are a massive threat to many Irish family farms and linked family homes. Unfortunately, the government has allowed these faceless funds to destroy families by seizing and selling viable family farms. Our bill would limit these merciless practices and tip the scales back in favour of the farm families by delivering legislative protection against the predatory practices of vulture funds and financial institutions. For example, recent figures from the IFA have estimated that 2,500 to 3,000 farm families may be in danger of seizure by vulture funds, with the total amount of land involved being up to 150,000 acres. However, the number is likely to be even higher than particularly as we enter into a high interest rate environment, which will place greater financial pressures on all borrowers, including farmers. Therefore, This is a very serious threat to all rural communities, and we believe this bill provides a genuine legal framework to put ordinary people first, by at least giving them a fair level of legislative protection. Vulture funds do not operate in the open. Instead, they use little-known corporate entities to avoid open scrutiny and adverse publicity. The government has facilitated this practice by allowing these funds to seize and sell off family farms all over the country. The reality is that over future years, vulture funds will be closing in on hundreds of farms. This is due to legacy debt and the sale of mortgage portfolios to global funds by pillar banks. For example, the exiting transfers from Ulster and KBC. This will result in these funds swooping up in indebted properties unless legislation such as outlined in this bill is passed. The vulture funds' primary interest is in the assets, not the debt. We know that these funds are attracted to the agricultural property and lands that secure debts. Farmers are now struggling to get loans from other banks to pay back to the hedge funds, and some are being left with very few options. That is why our bill also provides for a state-backed low-interest loan scheme for farmers. Ireland's backing cartel of Bank of Ireland and Allied Irish Bank do not understand the pressures that farmers are under. To be honest, these banks do not actually care. They operate a system that if you fail to pay, you lose. Unless the proper laws are in place to protect these people, there will be a free run for the vulture funds. Farm families are being terrorised by these funds. It is simply not acceptable that for the state to allow vulture funds to force the sale of land that has come as a security with a debt brought from a bank, when there are other viable alternatives. The laws are stacked in favour of the funds, as we have observed first-hand on many occasions. That is why we have brought forward the imaginative new bill. My colleagues and I in the Rural Independent Group, in conjunction with the former Master of the High Court, Ed Honan, are very confident that if this bill were passed into law, the farm families would be given the best possible legislative protection against the speculative practices of vulture funds and receivers. We strongly encourage all TDs to join us and vote in favour of this bill. In reality, to vote against this bill would be akin to protecting the rights of the vulture funds over the interests of the family farm. This bill would also pave the way for a new state-run institution that would extend a low-interest credit to all farm enterprises. It would be a massive shift, allowing access to capital and credit in rural Ireland, boosting the entire rural economy and pivoting regional development in the process. This bill provides a new approach to credit and impaired credit, which is unique to the farm enterprise. Therefore, it is hoped that the Government will accept the genuine spirit in which this bill is tabled and work with us to progress the bill through this House and on to the next committee stage. Naturally, we would be happy to work with the Government, or anyone else for that matter, and would welcome amendments at the committee stage. Likewise, we invite all stakeholders to engage in a searching reappraisal of the current dysfunction in the banking model, as it applies to Irish agriculture. For instance, in other countries, farmers have access to low-cost or almost zero-interest loans. In Ireland, our farmers are at full, greedy mercy of high-interest loans from banks. We fully expect that that the usual gang of anonymous and highly paid banking lobbyists will beat a path to the doors of any minister or government TD who might appreciate a briefing on the measures in this bill, in a desperate attempt to block or delay open discussion to protect the interests of the bank. The defining outcome of those lobbying efforts will rest in whether or not government TDs will vote in favour of this bill. When a vote is called. Shadowy figures from the banking world should not be allowed to derail this bill because it challenges their profit margins. Rather than the usual behind the closed doors lobbying by the banking elites, we invite and strongly suggest that all those individuals and institutions should come on the record and direct their observations to the relevant Oireachtas committee during committee stage deliberation of this bill, where they can be subject of constructive analysis. It would be nice for once to hear a minister undertaking to put on the record of the House a full record of all comments he receives front door or back channel when it comes to this bill. Such an undertaking might be the key to the open and the transparent debate. That is why we invite all TDs to take a brave step and support this bill at the second stage and beyond. In drafting this bill, we are drawn to remarks made by renowned Professor of Economics and Princeton University, Mr Atef Mian, which strongly criticised the Irish Government's policy, which favours the interests of the banks and vulture funds over the best interests of the borrowers. Professor Mian has said that Ireland's harsh creditors-friendly laws meant that households were bearing too much of the burden of strict mortgage rules, and that it would be better for the economy if people could get out from under their debts more easily. The potential of interest rate increases coming down the line will have a very substantial impact on people in arrears, as the interest will accumulate faster and will likely also increase the number of people falling into mortgage arrears. All in all, this represents a very serious hangover from the financial crash, which has not been addressed by any government over the last decade. It is very important to remember that agriculture is a work in progress at any point in time. The common good is best served by keeping Irish land in the hands of Irish farmers rather than giving it over to banks and vulture funds. Food security issues are also in play, but that the nation's land at the sovereign asset must be shielded against the disinterested speculators. For instance, Section 12 of the 1965 Land Act will filter all land transfers through the Minister's hands, and his scope of discretion within EU principles is more extensive than might first appear. There may come a time as an alternative option, for example, when farmland threatened with the foreclosure and with no prospect of farm debt settlement, an arrangement for whatever reason must be optioned to the state, rather than sold to a foreign vulture fund to be returned to full state ownership, but under the stewardship of the farmer prepared to manage the lands to benefit the environment through biodiversity and even rewilding. This bill would not be possible without the exceptional and invaluable voluntary contribution of the former Master of the High Court, Edmund Honohan. His first-hand knowledge of the difficulties faced by farm families and his exceptional legal expertise have been instrumental to the publication of this bill. My colleagues and I in the Rural Independent Group are very pleased that this bill is before the House this evening. Earlier in the year, we held a parliamentary briefing session in the evening, to which every TD was invited to inform all members of the Oireachtas about the merits and the objectives of the legislative provisions. That session was addressed by former Master Mr Honan. We sincerely hope that all TDs will join us and fully support the bill and the farm families it seeks to assist. After all, without substantial local agriculture in local ownership, the towns will be blighted and rural Ireland will continue to decline. Far too long the pillar banks have used and abused the farming sector in this country. Our bill would pave the way for a new state-run institution that would extend low-interest credit to all farm enterprises in a specialised manner. It would become a paradigm shift, allowing access to capital and credit in rural Ireland, boosting the entire rural economy and pivoting regional development in the process. The four main objectives of this bill include a moratorium monitored by a receiver. During the moratorium, the receiver will not be permitted to negotiate the sale of the security of the place, the farm on the market, and farming will continue as usual. The bill provides for an effective legal moratorium. After the moratorium, a farm debt settlement arrangement will be subject to court approval, and the PIE Section 115A veto override will be open to the court, which would allow the borrower to hold on to the farm after an appropriate discharge or structured debt. 2, the farmhouse would be an excluded parcel, the division of the collateral into 2 parcels, the farmlands and the farmhouse. The bill provides for the debt to remain charged on both, but crucially for the farmhouse, the Code of Conduct on Mortgage Arrears, including MAR, BMAR, will apply. This will give the family home legislative protection under the Code of Conduct on Mortgage Arrears process in MAP. 3, the inactive co-borrower is protected, often the wife. The co-owner can sometimes be casually involved as a co-borrower, although not a farmer. The law currently offers little protection. The spouse version of events is usually undocumented, and the bank's formal files are rarely open to the court, with the presumed admissibility of these hearsay records as evidence of truth of the record. Since the Oireachtas passed the Civil Law and Criminal Law Miscellaneous Provisions Act 2020, the scales of justice favour the lender if there is a factual dispute, where a fact is presumed it can't be disputed. And 4, the proactive measures to secure the future. Very often, difficulties in predicting the impact of anticipated shocks, for example, Brexit cap, reform, climate and weather extremes, make formal risk assessment for credit for farming, the farming sector a matter of guesswork. but the sector will need more credit. Standards, intermediation or traditional bank lending will not be enough to protect the long-term future of the Irish agriculture. We believe that the state has an opportunity set to create cross-border access to liquidity pools that cater for investors, including in particular PSG funds, at competitive rates. The NTMA can offer such funds credit default swaps. This would allow the state to establish a new state-backed bank for agriculture sector that can offer farmers low-cost loans. Thank you.
Thank you, Deputy. I now call on Mr. Charlie McConnell-Logue, who has 15 minutes.
Yeah, thank you. Cahir, and at the outset I acknowledge the work of Deputy Collins and his colleagues and Mr Honohan and the work and consideration that has gone into the bill. I also acknowledge that the intentions behind the bill are genuine and that the primary concerns of the deputies are based on protecting the family farm. We all share that concern. The family farm is the bedrock of our €14 billion export sector, and it ensures a balanced regional economy, and it plays a huge role in the fabric of all of our lives. The Irish farming model is almost exclusively based on the family farm. Around 30% of our farms, mainly dairy and tillage, are classified as full-time in terms of labour input required, but still relying mainly on family workers. However, the majority of Irish farms are part-time, small-scale family farms relying on diverse income streams, including off-farm employment. That structure undoubtedly has its challenges, but it is the family story behind Irish food and drink which is part of what makes it unique for our own consumers and for consumers all over the world. Farmers are the foundations of our sector, and for them, this is not just a business, it's a tradition and an honour that is passed down from generation to generation. Farmers are the first to recognise that for this to continue, it must be done sustainably. I know this firsthand. I was born on a suckler and sheep farm in North Inishowen in Donegal, and it's a farm that reared me and my 5 siblings, and I was honoured to run the farm before entering politics, and it's now run by my brother. Every family hope that the farm will be handed down to the next generation when the time is right. Protecting and enhancing farm incomes is at the very heart of everything I do, deputies, as Minister. Our shared vision for the future of the sector, Food Vision 2030, states that for farming, the family farm model is key to economic, social and environmental sustainability. In common with everyone in the House, it's a model that I really want to protect. However, I don't believe that this bill will assist farm families. Fundamentally, the restrictions it places on debt recovery in the sector are such as to dissuade financial institutions from lending into the sector in future. Land mobility is hugely important, as is access to land. Primary responsibility for banking and credit policy lies with my colleague, Minister for Finance, while enterprise policy is with the Taoiseach, Minister for Enterprise, Trade and Employment. Access to finance is a crucial business need, and as well as liaising with the main banks on issues relating to the agri-food sector, my department and I work closely with the Taoiseach Minister for Enterprise, Trade and Employment in his department, as well as the Minister for Finance in his department. This has been a good working partnership that has yielded important supports for businesses through the Strategic Banking Corporation of Ireland. This was to ensure that they have access to finance to help deal with the challenges brought about by Brexit, COVID-19 and the impact of the war in Ukraine. Finance for business is required for 2 main reasons. Firstly, as working capital to ensure the efficient functioning of businesses on a day-to-day basis, and secondly, as investment capital to develop and evolve to meet future needs and challenges. I am working to ensure that farmers, fishers and food businesses have access to appropriate supports, whether through private provision or with the help of state-backed schemes. As a small economy, we must pool our resources to provide appropriate business supports. For example, the Future Growth Loan Scheme supports strategic long-term capital investment by small and medium enterprises, farmers and fishers, and delivered some €800 million in competitively priced loans. The unique characteristic of the scheme is that loans of up to €500,000 are unsecured, making it a viable source of finance for young and new entrant farmers, especially the cohort who do not have high levels of security. It also serves smaller scale farmers who often do not have the leverage to negotiate for more favourable terms with their banking institution. The Future Growth Loan Scheme has been in high demand generally, and especially in the agri-food sector, with some 46% of loans by number and 31% by value. That represents loans to 1,289 farmers with a value of €155 million. The agri-food sector has a demonstrated capacity to plan for the long term, even when grappling with more immediate challenges. This government also delivered the Brexit Impact Loan Scheme to Brexit-impacted businesses, including farmers, for working capital, investment and refinancing. This was then extended to COVID-19 impacted businesses when the worst effects of the pandemic were being felt. Again, large numbers of farmers and businesses in the agri-food sector generally were able to avail of these initiatives, some 55% in terms of the overall number, and a value of 40%. So that meant that there was 850 farmers and a value of €68 million in loans. In addition, in response to the liquidity concerns when the pandemic hit, the government introduced the COVID-19 Credit Guarantee Scheme with a capacity of up to €2 billion to facilitate the provision of eligible financial products to COVID-19 impacted SMEs and small mid-caps, including farmers. In Budget 2023 Cathaoirleach, I was happy to announce that with the Taoiseach, the development of a new long-term lending scheme. It will ensure that there is appropriate option available to farmers, fishers and food businesses to access finance for strategic and investment purposes. The new proposed €500 million Growth and Sustainability Loan Scheme, or the GSLS, will facilitate strategic investment by farmers, fishers and food businesses, which will ensure their continued viability and sustainability into the future. We are also working, Cathaoirleach, as well together on a Ukraine Credit Guarantee Scheme to assist businesses, including farmers, fishers and food businesses, in meeting their liquidity and investment needs, especially in this particular time of economic uncertainty. All the main banks have specific agriculture products and services, including dedicated advisory services. I speak with the banks regularly to ensure that the sector is well serviced. Central bank data shows that credit advanced to primary agriculture was €686 million last year, or in 2020 last year, and has been consistently at that level over the past decade. Credit outstanding at the end of 2021 is just over €3 billion, slightly lower than the €3.3 billion that was outstanding the year before, but down from a high level of €4.7 billion back in 2010. We monitor debt levels on an ongoing basis, and the Teagasc National Farm Survey for 2021 shows that across all farm systems, 6 out of 10 farms have no farm business-related debt. However, this figure varies considerably, as you can imagine and understand, by farm type. 2/3 of dairy farms had borrowings in 2021, compared to 1/3 of cattle farms. And just over 1/3 of sheep farms had outstanding farm debt in 2021, with closer to half of all tillage farmers reporting borrowings. When farms without debt are excluded, the average dairy farm debt last year was €139,000. The average debt on cattle rearing farms was €29,000, just almost 29,900, with cattle finishing farms at €46,700 as an average debt, and then in sheep farms it was at just over €21,000. So the data indicates that the average debt on tillage farms was €64,000. The majority of farm-related debt, or about 72% of it, was classified as medium to long term, with a further 18% relating to hired purchase or leasing, and the remaining 8% considered to be short-term debts, such as overdrafts. This data on credit advanced and credit outstanding strongly suggests that the primary agriculture sector is well placed to manage debt, and default rates are generally amongst the lowest in the economy. By introducing this bill and its conditions and requirements, it immediately jeopardises farmers' participation in any horizontal access to finance supports, and would also jeopardise their ability to access credit generally. In addition, Government opposes the Impaired Farm Credit Bill 2021 on the grounds that impaired farm credit arrangements are already provided for under company law, where the farm business is incorporated as a limited company, or under personal insolvency law, where the farm business operates as a sole trader, which is in the vast majority of instances. The existing insolvency legislation, either for personal insolvency or for company legislation, already requires well-tried and known pathways for resolving farm debt as well as any other collateralised debt. Section 115A of the Personal Insolvency Act allows courts to impose a debt restructure on secured creditors. It is a very carefully balanced and exceptional provision and strikes a very carefully calibrated balance between the different constitutional rights concerned. It was introduced only after very detailed impact assessment, policy analysis and consultations between all relevant government departments and the Office of the Attorney-General. The Central Bank has a code of conduct on mortgage arrears which sets out the framework that lenders must use when dealing with borrowers in a mortgage arrears or in pre-arrears, including use of the mortgage arrears resolutions process. There are already also strong legal protections around the treatment of the family home, obviously including the farmhouse where that is the family home. Looking at the bill objectively, there isn't an evidence base to support the proposals that a separate debt management protocol and legal framework is required in relation to agricultural property. The introduction of a law relating solely to the treatment of farm debt would likely require constitutional justification as to why farm debt was treated differently from all other small business debt, and consideration of how farm business activity secured on farmland is to be treated. Secondly, the bill proposes to limit certain financial regulatory functions and makes them subject to the consent of the Minister for Agriculture, Food and Marine in a manner which is inappropriate. The bill, for example, proposes that the Central Bank shall report annually to the Minister for Agriculture, Food and the Marine on the trends noted in the quantum and beneficial ownership of lands charged with repayment of such loans, and that the Central Bank shall establish and manage a brokerage supporting farmers seeking finance and refinance from elsewhere in the EU. The bill further provides that any transaction which might have the effect of vesting beneficial ownership of farmland in collateral recovery businesses or in securitisation vehicles shall require the consent of the Minister for Agriculture, Food and the Marine and prescribes conditions attached to that consent. The bill also requires that the National Treasury Management Agency shall make available for sale credit default swaps with a view to supporting access for farmers to shadow banking intermediated liquidity on a second mortgage basis. These very detailed proposals suggest that the exercise of specific financial regulatory functions will be subject to the consent of the Minister for Agriculture, Food and the Marine. And it's my view that this would constitute an unwarranted interference in the independent functions of the appropriate financial regulatory bodies. Importantly, these are areas of policy for which my department doesn't have responsibility. In conclusion, I am committed to ensuring that the agri-food sector has appropriate access to finance. The ability to access finance at the lowest possible rates will be crucial to the continued success of the agri-food sector, especially at a time of considerable challenge for the industry. I believe that the introduction of this bill and the requirements and conditions within it would hinder rather than assist farmers, and while well-intentioned, it is fundamentally flawed, and so the Government therefore opposes its introduction.